Hello and welcome to another update video about MATIC. Today we see a little bit of a bounce from our support area, trading area there, but I think it's only a 3-wave move up so far, so not enough evidence to suggest that a low has already been established here. We're going to take a look at that in a minute. Yesterday only we talked about the possibility of forming a triangle here and one more low. Because triangles favor trend continuation and the local trend is down at the moment since this high that was formed on the 27th of December, 28th. And yeah, I mean, it didn't really form a beautiful triangle, but it still broke down further, suggesting that this wave 5 here completed possibly that overall correction. So we're going to zoom in a minute. First of all, let's understand the bigger picture. The idea is that MATIC formed 5 waves up in this leading diagonal, which is good to see. So we have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. And the idea is now that we are in this pullback zone for a wave 2, which could be useful for accumulating for a third wave rally that should happen afterwards. So this might be something that swing traders might want to look at as potential opportunity, because let's just make some calculations. If the wave 2 finishes in this region at some point, let's assume the wave 2 finishes around the golden ratio, the 66 cent level, then we're normally looking for a third wave to reach at the very least the 1.236 extension, but that would be a very, very shallow third wave. So more common would be the 1.38 extension. Here we talk about $2, so that's an easy, what is that? I mean, that's more than 2x. And then we talk about, depending on from where, obviously, right? And more common would even be the third wave reach the 1.618 extension, okay? And that is obviously here at $2.45. Then we should still get a 4 and a 5 that could reach $3.30. So again, you know, this is an opportunity. And therefore I am acting here as well. So, however, obviously where exactly the low will be formed, this will be difficult to determine even when watching the chart. I mean, we see a reaction right now. I mean, technically, look, this wave 2 could have bottomed, but at the moment I'm primarily watching for a more extended ABC structure. So definitely what could happen is this as an A wave, a B wave, and a C wave, and then the wave 2 will finish a little lower. It is always possible that the wave 2 is finished in one go. I already see this as a 3-wave move itself, so it is technically possible that this A, B, C structure is finishing the wave 2 as it is. But then if I look at how long the wave 1 took in duration, it is not so likely that the wave 2 only needs a couple of weeks. So again, that's why I primarily focus on a more extended ABC structure. That, however, doesn't really make any difference to tactics. This is just what would be ideal from a structural point of view. But from a tactical point of view, again, it might make sense to layer in positions here in this region. And then if the market makes profits available with a rally in the B wave, it might make sense to take some partial profits. The B wave might not reach much more than 90 cents. But could reach easily 94 to $1. I mean, again, this is the standard resistance range. Could be finished at 90 cents, which is the 50% retracement. Sometimes B waves are a little more aggressive. $1 would not be unusual in this case, 78.6 retracement. But just note that these are the fib levels that are relevant mainly for a B wave initially. Anything above that would already suggest that the third wave might have started. And, you know, whenever we move, you know, it might make sense to move the stop loss into break even. And I mean, if it breaks down completely, then we have the 58 cent level as warning level. Okay, so this entire structure and scenario is valid with a third wave rally to come, as long as the 58 cent level is holding. Now, below that level, the scenario is not invalidated, but really it's very common that these setups, a so-called 1-2 setup with a third wave rally, these setups break if there is a break below the 78.6 retrace. That's not the invalidation point. The invalidation point is down here at 50, but we don't want to wait until invalidation. We want to get a good entry in an ideal support zone where probabilities are high for a turnaround And the 58-cent level, as I said, is key support. We also have 66 cents and 73. So, but yeah, I mean, if you use this area to find entries, that's essentially up to you. It can be used, integrated into your trading plan, but you might have a completely different strategy. Essentially, this is only the analysis. I'm not telling you how to trade this because that depends so much more on your portfolio, on your risk profile, on your, cash and everything than on the chart itself. But I think there is it's a reasonable assumption to watch for a third wave rally from here or after another dip into support. So primarily I'm following a more pronounced ABC structure in wave 2. That's my update about MATIC. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.